All right. Hi, everybody. I'm going to try to make myself the host here. Give me one quick moment, and then we'll get started. Okay, guys. Welcome. We'll just wait another quick minute or two just in case we get a couple more people that jump on. But I think I am now the host. Okay, fantastic. All right, so I'm going to share my screen. And this is the one I want up. Okay. All right. Somebody give me a yay. You can see what you see on the screen. We're going to start with the 2025 updates in the mortgage world. You guys see that okay? Awesome. Thank you, Jacob. I appreciate that. Okay. All right. Give me one quick second. I'm going to go ahead and shut this door. Then if anybody wants to come in, they can and just join. It might want scaries. Permeate throughout the whole office. All right, everybody. We'll go ahead and get started. Good morning. Thank you guys for joining today. This is Cliff with CrossCountry Mortgage, and I do appreciate you guys jumping on this the Zoom call and in person. So lots of great new updates. I think 2025 is really going to be, a fantastic year. I mean, I know we're all going to have to, kind of work harder and work smarter, all those kinds of things. But I truly believe, based on everything that we've been seeing in regards to what's coming up in the this upcoming year, as far as, not just interest rates. I mean, I'm talking like with inventory, with new homes being built, with new stuff coming on the market. It may be a little bit of a slow start at first, I think, but I think it's really going to kind of come through and to be real positive for everybody. So everybody keep doing what you're doing, keep grinding. I know that this is going to be, especially the ones that really adapt to this market and really kind of take things with more education with clients and just maybe a little bit more time with them. You're definitely going to see the fruits of the benefits and everything. So, but I really wanted to kind of go over a couple new things that CrossCountry Mortgage is going to offer this year. We always try to reinvent ourselves and really try to be top of the market. I think that's probably why we're the #1 mortgage company, in the country. We thrive on expansion. We thrive on, new ways and new products. What can we do to, help, buyers, get into homes? I mean, because it's truly, our passion. Ron Linhart and our owner of the company really has, just a vision of trying to find a solution or some type of program for every single borrower. And and that all kind of permeates from the top down. And, we've all bought into, just the idea of there's got to be a way, even if somebody's not ready now, what can we do to potentially get them to be ready to be a home buyer in the future? And I think that's what really sets us apart. We're not the kind of company that if you're not approved, they just kind of discard you and we move on to the next. That's not how we do it. We try to figure out, okay, what's the problem? What are the issues that are causing for this particular buyer to not, he or she to not be ready yet? And what solutions can CrossCountry Mortgage offer? So that's what we really try to focus on: new products, new different opportunities, for each and every client that we come across. So, but first, what I wanted to kind of touch base on was just the initial things that you guys have maybe even seen or you haven't seen, that are affecting and went into effect January 1. Okay, which is the new conventional loan limit is now up to $806,500. So this is crazy. You guys, back in, geez, what was it, 2002, when I got into this business, the max conventional loan limit, I think was like 415 was at that time. So it has literally doubled in over 20 years. I mean, it's unbelievable. And, the reason that I even bring this up and kind of, bring this to everybody's attention is just how far things have come and the changes with this. And with this particular loan limit of the 806,500, this is under the standard conventional guideline. This is not jumbo loans. Like just even a few years ago, 806,500 was a jumbo loan all day long, which required, you know, possibly two appraisals, more assets, depending upon the credit score for the borrower, how much they would have to put down, all those kinds of things, so it's really, unique to kind of see where we're at now as an industry and what the market is really kind of showing us to just let people know, like, hey, these are the changes. I mean, we're moving along with the times. I mean, all these things that are coming across, to us now, it's just amazing. And it's just to see from where we started, to where things are now. And I wonder, even before I got in the mortgage business, where the loan limit was, but I'm sure it was probably a lot less than 415. So but it's just really neat to see, guys. I know we don't run across these types of loan sizes all the time, but in the event that you do, it's going to be a lot easier pathway for the buyer to, get an $800,000 mortgage loan, without having to go through any of the extra steps for jumbos. So, I mean, jumbo pricing and jumbo loans are great. We have some excellent products for those as well. But like I mentioned, they do require a couple additional things. Like I said, reserves, maybe cash down, two appraisals, those types of things in those certain situations. So this is just awesome. And then next, I wanted to put in at least this one is just for a single family. There's higher for the multifamilies for FHA for 2 units, but I just focus on the single family because I know that's, for the most part, most of us, are selling single family homes. So, but the new FHA loan limit for Stark and Summit now is 524,225, and this is just unbelievable. I honestly didn't think that FHA would go that high, for a single family. And even in other states, depending upon their demographic and where the market is, I think it's even higher in some other states. But back again, when I got in this business, I think the max loan limit at the time that FHA would even do, I think it was 200 and what was it? Maybe 232,000, something like that, I think is where it was at, is where they came. And so they're, same thing with, Fannie and Freddie, government, backed loans. They are now following, the market. Homes are getting more value, and, the price point is increasing. And so they're moving along with the times too. So that's such a big thing, for FHA, to kind of keep following suit. But what's listed here, the 524,225, that's all listed, just for Stark and Summit County. But if you guys have any questions or you need me to check, other counties that you guys may, do business in, you can always call me and let me know anytime. I'd be happy to help. Okay. And then for VA loans, the VA loan limit, and this one's pretty standard across the state of Ohio in every county. The VA max loan limit has now jumped up to 806,500, and this was pretty similar to the conventional loan limit. Even back when I started was right around like the 415, and so they've pretty much followed suit with the conventional loan limit guidelines. So that's just unbelievable. It's nice that they even took even an extra step, being a government backed loan, as opposed to like FHA or USDA, those types of programs. But so they've just kind of followed suit with conventional loans as where they're going to place their loan limits for qualified veterans. So very, very cool. And next I have on here, you'll see, is the Fannie Mae Home Ready and Freddie Mac. Freddie Mac's is equivalent. So why I didn't add that on there, but Fannie Mae Home Ready program and then Freddie Home Possible program. I wanted to put the area median income for Stark and for Summit County too. Sorry about the typo there. That should say Summit County. But the first one, Stark County, is 68,400. And for Summit County is 76,640. Now, the reason that I put those two numbers on there is for first-time home buyers. So you've got a client that is putting anywhere between 3 to 5% down, okay? And if they meet those Fannie Mae Home Ready requirements or the Freddie Home Possible, requirements for that, if their income is that, it's for just for like an individual borrower, they automatically qualify for our CrossCountry mortgage, our CCM Smart Start program. So which means they could get potentially up to $5,200. It's 2% up to $5,250, I believe, towards their transaction right off the rip. There's nothing they have to do. They don't have to do like with OFA down payment assistance programs, there's no OFA course or anything like that they have to go do or anything like that. They automatically get it from CrossCountry Mortgage, to help them with their transaction. I mean, it's just incredible with what the company's doing to really try to help get borrowers into new homes and to help you guys, with grow your business more. So anytime you guys have clients, depending upon the area median household income, I'll check on those different ones in each different county, because I know Columbus has a certain amount, like Franklin County and some of those areas, plus Stark and Summit County and things like that around up here, Portage County, I can look into. So wherever you're planning on doing business at, just let me know, and I can go right to Fannie Mae's site or Freddie's site to see what the area median income amount is, to see if they could potentially qualify. So, but that is part of the program. 3 to 5% down, is the program. If they put 20% down, that's not, the first time home buyer product. So just to kind of be clear on that, even if they're home ready, if they put 20% down, they'll still get an interest rate, reduction, based upon their pricing for that. But they won't get the Smart Start fees. That's only for 3 to 5% down. So, but great news and great information, that's entering into 2025. Any questions at all before I move on to, the next, new things? That's what's new in CrossCountry. If you do, just, interrupt me, stop, unmute, and just let me know if you have any questions, and then we can get those answered. Okay. Now I'm going to go to start with, all right, so we did this one. All right, this one is the one I want to kind of start with. This is a pretty cool one. So let me see. Let me close this so you can see this a little bit better. There we go. Okay. All right, guys. This program is called one of our new products that was entered in for 2025. Technically, it kind of came in towards the end of last year, but I just really wanted to promote it. I know things were a little bit slower, towards the end of December into January, but this is a new product, guys, that's kind of out there for your clients that, possibly are into the Energy Star, the savings and things like that. But just to give you a quick rundown of what this program is the CCM Easy Green is based on Fannie Mae and Freddie Mac guidelines. So Easy Green allows borrowers to finance Energy Star product appliances to improve their home's energy efficiency while taking advantage of a cheaper interest rate with no loan level pricing adjustments. That's what that means. So very cool. So normally, if somebody wanted to do this, you can't normally finance anything with a mortgage unless you're doing some type of a renovation loan, or you have equity in your home in order to um, refinance and roll in what your guys are wanting to do. But this allows you for us to finance that in. It's so cool. So just some of the highlights of the program: to lower interest rate. There's no agency pricing adjustments, like I mentioned, no loan level pricing adjustments. The ability to finance Energy Star products into the loan, consolidate energy related debt in a rate and term refinance. So here's a couple of some of the requirements. Um, okay, so income requirements, it's 100% heir to moderate income, so it shouldn't matter where it's at. The max LTV for the standard program is 95%, but up to 97% first-time home buyer. So if they qualify for home ready or home possible, their down payment is still going to be the 3%. So it's for primary residences only, and they can do this on a purchase or a rate and term refinance. It can't be like a cash out refi or anything like that. So they can't get cash out, but they can finance in, those particular things. So, but here's a good note of what products that it qualifies for as far as the property type. So it's 1 to 4 units. So it's a single family residence up to 4 unit, as long as it's a primary residence, a condo, manufactured home, all those types of, products. Escrow holdback requirements for financed improvements, is required if we're going to do for any other type of thing, like escrow holdback required for financed improvements. So basically what we'll do is they can do an escrow holdback to help with, some of the extra fees and things that are going to be involved with it. So very, very cool. This is just something that's nice that I wanted to kind of let you guys know that's new. So if you got that client that is all about the easy green, with the environment and all those kinds of things, and they're really wanting to get some of these Energy Star products and appliances to help improve, the home's, energy efficiency, we have a solution for them. So very, very cool.
Like just for like stoves, refrigerators, washer, dryer, that kind of stuff, or can it be for central air?
Yeah. I mean, I'm assuming it can be for any type of appliance. If it's one of those Energy Star, type of products that helps with improve the home's efficiency, it should qualify. Because I mean, they were really, they're like, look, if this is anything that has to do with the home, that's can help the overall, integrity and efficiency of the home, it should qualify.
That's a big difference in price.
Oh yeah, for sure. Yeah, if you're talking like, like a heating system, or one, that's a good question too. I may even check on, because I know a lot of people did those, what do you call those? Solar panel, like roofs and, things like that. So, I'm assuming that's an Energy Star type of a product. I'm going to, get some more information on that. So if you guys do have questions, let me know and I'll make sure and get you the answer. But yeah, great question. Any questions real quick from anybody on Zoom about the CCM Easy Green product?
I don't have any questions, but I don't know if anybody else is having this issue. But
Yeah.
your slides aren't coming across on Zoom, Cliff.
Oh, you guys can't see them?
No.
Okay, hold on a minute. Let me try it again here.
Are they seeing you though?
Are you guys seeing me?
Yeah, I saw you, and I had the first slide came across with
Okay,
the
hold on. I think you know what it was. I think I clicked off on the wrong. Hold on. Okay, can you see it now?
yeah. I can see that now.
Okay, great. Thank you for speaking up, Nick. I'm glad. I just wanted
Yeah,
to make sure
sure
I
thing.
want you guys to be able to see everything, so I appreciate it.
Yeah, you bet.
But yeah, so this is the program that I explained, and this is just I just wanted to at least post this so you guys could see. If you guys have any questions or if you need this information, I could always send it to you as well. But great information. And the next product that I wanted to talk about, which is another really cool one, this is one of our new down payment assistance programs that we have. Now, you guys already know that we have our CCM Smart Start. You know that we're already an OFA approved lender. If you don't know this one, we have another product through Communities First that we have that helps with down payment assistance. So we have multiple outlets for down payment assistance and everything. We now have a new one. This is the CCM Community Product Promise product, which allows for more down payment assistance too. So this one is based on Fannie Mae's Home Ready product. So pretty similar to what the, for the Home Possible and like for the CCM Smart Stove. So same type of guideline. This one just has a little bit of a difference to it. So the CCM Community Promise provides up to $6,500 in down payment assistance for borrowers currently residing in an eligible MSA. Now, that's the difference between the standard home ready and Home Possible product, where there's really no specific area. As long as you meet the area median income requirements, you can qualify for it. This particular program, the home has to be residing in an eligible MSA. An MSA is a metropolitan statistical area. So depending upon where your client is possibly wanting to buy a property, let me know, because because I think now our system is so advanced where when we put the address in of the property that they're wanting to purchase, when I'm running and this is after they get under contract, it'll let us know, hey, they have X amount of options that they could possibly qualify for. If they meet the income requirements and they meet the MSA requirements, all these kinds of things possibly may be an opportunity for them to receive some down payment assistance, and they may not even know it. So this is what's great. So our system is already set up now. If it's located in one of those eligible areas, we will automatically get prompted and let you guys know, hey, and the borrower know, hey, they can potentially get up to $6,500 in down payment assistance. Plus, they get a $500 appraisal credit, which is really cool, which helps, with the down payment assistance, and a $500 appraisal credit. The interest rate, they actually get better pricing in specific areas too, to help with, just the community, just growing and getting people to purchase homes in certain areas. Okay. Then obviously with the lower interest rate, that'll help the lower mortgage payment, and reduce mortgage insurance too. If the down payment is is greater than 90%, they'll get reduced monthly mortgage insurance as well. So lots of different, factors that are in this particular option that the borrower can just kind of gain. There's so many different benefits. So depending upon, here's some of the other eligible criteria that you guys can see. So with the down payment assistance, so $6,500 for non-Fannie Mae owned properties, and up to $7,500 for Fannie Mae owned properties like Home Path, etc. There's no income requirements, was great. That's a great, perk to have with qualifying for this. One borrower must be a first-time home buyer and currently reside in an eligible, like I mentioned, metropolitan statistical area. So, but you can see all the states that this program has already been rolled out in, all the eligible states. Ohio's on there. That's obviously the one that we want to focus on and that I was focusing on to make sure that was an eligible state. We can go up to a max LTV of 97%. This is strictly just primary residence only, and this is strictly a purchase only program. But at least the property types, they give you a little bit more flexibility. So 1 to 4 unit, single family residence, condo, manufactured, co-op, all those kinds of things. So, and home buyer education, this is one of the programs that they do have to do the required, first-time home buyer education, but it's really so informative. That's not like it's a hassle or crazy time consuming. It's really good information that they, just kind of go through with the class. I mean, it just goes over all of the steps about being a first-time home buyer. So if there is, any kind of questions, it kind of sets them up and prepares them for, okay, what do we do now that we're a homeowner? What things are there to expect? When you're talking about utility bills, you're talking about, keeping the property upkept, whether it's landscaping or, grass or, whatever those kinds of things. It just basic information that helps prepare you for, for what's coming, ahead of you to be a home buyer. So those kinds of questions are always asked a lot. Well, what is this home buyer education course? Really is informative and it's great. So they will absolutely love it. So I just wanted to make sure and go over this particular program with you guys, which is our new CCM Community Promise program. Is there any questions at all before we move on to the next option? Like I said, always interrupt me. You can just say, Cliff, I got a question, stop me. If you want to reach out after to chat and go over some things with, but with your borrowers, absolutely let me know. Okay, so next, which is a really cool product too, is we've always had outlets where we either had to outsource a home equity line of credit product. We did have our own CrossCountry mortgage home equity line of credit product, but now we've like really revamped it and it's just amazing. So if you've got a client that is looking to, pull some equity out and wanted to get a HELOC or anything like that to maybe either buy another property or anything like that, let me know, because we have a home equity line of credit product now that's a fixed rate product. Okay, so this allows borrowers to access their home equity without losing the rate on their first mortgage. So it's a very simple and easy application process. I send them my link, when I normally send everybody a link to click on my apply now link to fill out my standard application. There's another box underneath my signature line that says access your equity faster, CCM Equity Express. They actually just click on that box and it takes them right to the application, and it's very easy. It's very user friendly, I should say, as well, for clients to get that all figured out and enter in their information to see what they could possibly qualify for and to see how much they can borrow equity wise. The system does its own automated value module, so it has its own AVM system in it. So it'll say, hey, this is what your home should be worth based upon the area value modules that they have, and they're always up to date. So depending upon what it is, they'll just do it right off of that, and you can go up to, I think it's up to 85% depending upon credit score. So here's some of the eligible criteria just so you guys can see. And this is what's great too, is the max combined loan to value is 85%. So it's for a primary, you can use it for a primary, a second home, and an investment property, which is crazy because there's not been too many home equity line of credit products in the market for investment properties. Okay. And this is strictly just to get cash out. Property type, 1 to 2 unit, single family residence. So basically they have to keep it at least a 2 unit. If it's fine, single family residence, condo. And here's like the draw periods, like the amortization for it. That you can have a couple different options. If you wanted to do like a 30-year term, you have up to 5 years that you can draw from it. You can, because initially you're going to get sent to you the funds. So whatever the line of credit is amount, say you're doing a $30,000 line of credit that you get approved for, you're going to get $30,000 sent to you. If you don't need it right away, you can absolutely put it back on the line of credit and let it sit. But it gives you, up to 5 years to keep drawing from it if you wanted to. So after its initial use, and you say you paid it back, you can draw from it again. So that's what's great. So if you gives you plenty of time to to use it too, and you can break it down depending upon how long you want to have it too. A 5-year term, you can draw it up from up to 2 years. So if you use it and you pay it off, you want to use it again, 10 years, 3 years, 15 years, 4 years, 30 years, 5 years. So very cool product, that you have access to. Yes.
All right, so second home NOO.
Yeah, second home in investment, that's where it's capped. Yes, good question. So on here, guys, just to clarify, so if it's a primary residence, okay? The max, which just means they're living in the home. 85% is the max combined loan to value, the CLTV. So combined loan to value means whatever the first, if there's a first mortgage on there, whatever the equity you have between the balance of that mortgage and what the property's worth, that 85%, whatever that difference is what you have access to as far as a line of credit.
And this has to be used to purchase another home?
No, you can use whatever you want.
Oh, okay.
Yeah, that's what's nice. That just gives you, that's just an option because I want to share that with you guys since you're the agents. If they want to use that to buy another home, they absolutely can.
What about because right now I'm seeing a lot of credit card debt with the
Mhm.
interest rates being so high. What kind of interest rate are they looking at on this?
Yeah, because on these, I'll give you a good example. I just did one that closed. I think it was this was just before Christmas because my guess is I think they were consolidating some stuff too. So they did like a $45,000 home equity line of credit, and their rate was because they kept telling me what their rates were on their credit cards and everything, and I think the rate they got was 9% fixed on a home equity line of credit based on the term that they selected. So yes, yep, on their credit score. So it saved them, I think from what they told me with everything that they paid off, about 950 a month.
So are you also looking at income and loan to debt ratio as well?
Correct.
Or it's still the same?
It's still the same. Yeah, it's all, yeah. So as long as they can, provide their income and get all that shown in there that they can qualify for that, then it's a quick process. And we actually closed that home equity line of credit in 9 days. Yeah, it's very, very quick too, guys. That's such a very quick turnaround time because once they go in and they apply and they'll get notified what their options are. So they can go in and select maybe what amortization term, what type of draw period they want to do, all those kinds of things. And it'll give you a different option too for the interest rate. Like if you wanted, a little bit of, because there's no, as far as like a fee, there's like a 1, 2, or like a 3%, whatever fee it is, but you could select which one you want. So if you want the lower rate, the fee will be a little bit more, but if you want a little bit higher rate, the fee is less. So it just depends on what they qualify. They give them like 3 options to choose from, and they pick the one that makes the most sense for them financially. Yeah.
What if the house is in a trust?
Mm-hmm.
Still take out a HELOC against a house that's in a trust, and who does that?
Yes, that's a good question. I know as long as it's still, if it's considered their primary residence, like they're living there, um, I can't imagine that wouldn't be fine because you can do, even people that are doing like a purchase that they want to put it in a trust, we have to, this is a different situation where, like first mortgages where we would have to review the trust and go over all that stuff. On this end of it, I don't believe you have to, because it's literally once we get an approval and we get everything set up, you'll get documents sent to you to get everything e-signed, and then like a notary will come to your house and do the closing. And so you can just let them know, hey, this house is in a trust. We want to close this in the trust and just be done with it. It's a total different type of situation. But I'll make sure and just get some clarity on that just to make sure. But I can't imagine, because it's a lot different than doing like a standard first mortgage.
Right. And I think this is necessary, especially with the interest rates being so high on credit cards.
Oh yeah, the
right
people are
now.
they're getting hammered.
They can't qualify.
Yeah.
Because of they can't make the payment.
Yep. It's unbelievable. Credit card debt is racking up, by the day, and these types of options. I know I wanted to, try to focus more on, what we can do as far as like purchases and things like that. But this product and the next product that I'm going to talk about are still going to be very valuable tools for you to let your clients know, because depending upon their situation, they may be able to do a HELOC to pull money out to use it towards buying, or the next product that I'm going to kind of get into is going to be another thing that I think is going to be a great benefit. But any other questions on the CCM Equity Express fixed HELOC? Any questions or anything like that from anybody else? Okay. All right. So This is the other one that I wanted to talk about real quick too, which is very similar to the home equity line of credit, at least from a standpoint where this may be an option to help borrowers get some cash out. So, like, say, for instance, they're wanting to do a cash out refinance to consolidate debt, to either get themselves in a situation where they're lowering their monthly obligations, plus maybe getting some money to use towards purchasing another property. This is another program, guys, that is going to be an absolute game changer, for a lot of clients, because there's nobody else on the market right now that is doing a cash out refinance above 80%. There's nobody doing one. We have one now. This is our own CrossCountry Mortgage signature agency cash out express product. Okay, that our company is doing. This isn't something that has to go through, multiple overlays or the other types of traditional things. So this is not that. This is CrossCountry's particular product. So just to kind of give you a quick overview of what this product is and how it's processed. So loans submitted to the CCM Signature Agency Cash Out Program must be underwritten to either Fannie Mae or Freddie Mac guidelines. So we do everything still the same as far as Fannie Mae or Freddie Mac guidelines. We do everything based upon their guidelines that they set for lending institutions like us. So in addition to meeting the select agency selling guide requirements, they must meet the following eligibility requirements, which are going to be here listed below. So as far as loan terms, so 15 and 30-year mortgages are going to be available for this particular product. So when we're talking 15 or 30 year, those are the options. We don't have any ARM products or anything like that are available with this product. So loan amounts, agency conforming loan limits for each state. So you know how we went back and we said, let's just kind of jump back to this one here, like 806,500. That's the new county conventional loan limit. That's what we can go up to as far as potentially, if they have enough equity and everything in the property, they can do that much as far as a cash out. Okay. And so there is a minimum loan amount requirement though for this product. It is 100,000. So I know that's always a topic of discussion. Since this is a signature product, they do have to put a floor on this particular program. Now, mind you, if it's a standard cash out refinance and at 80%, we can go under 100,000. Okay, so it just depends on what they qualify for. This particular product is just allowing someone to go up to 90% of the home's value in order to pull equity out to do what they want to do with. And so the minimum FICO score requirements that you can see on there, which is the credit score, is a 680. So as long as they have a 680 or higher, they can go up to 90% loan to value on cash out on the home. So very, very cool. And here, as far as max DTI, this is actually an easy one. It says per AUS, which is the underwriting system through Fannie Mae or Freddie Mac. We have to get an approved eligible, and the back end debt ratio cannot exceed 50%, but that's standard anyway for conventional financing. You can't go over 50% on a conventional loan as far as debt ratio. So that's just something that I'll let you guys know. But say, for instance, if they didn't have a 680 credit score, they only had a 660 credit score, then they would be limited to an LTV of 80%, which is the standard industry amount. Okay, so the qualifying credit score will be calculated on the lowest middle credit score of each borrower, which is still like a Fannie Mae and Freddie Mac guideline. So there's no real changes or differences there. That's all pretty similar when we're running any type of conventional program. Occupancy. So we have primary residence this is the only product that can only be used on is a primary residence. So we can't do cash out 90% on investment properties or anything like that. It's got to be a primary residence. Okay. All right, and here's just some of the, just some of the information that I still like to show with you guys. What we see on our end when we're getting a client approved is these are the AUS findings. When we run it through Fannie Mae's DU or Freddie's loan LP, which is loan prospector. So we have to get either a DU approve eligible, a DU approve ineligible due to LTV only, because in some cases, when you're running everything through DU or LP for conventional financing, normally everything comes over approve eligible. But if it does come over, say, approve ineligible, it'll say due to what? Is it saying this is an ineligible, whether it would be to I'm trying to think of another good example that we had ineligible, either due to LTV, or which is the loan to value, or it was on a product that was for a single family home as opposed to a multifamily. It'll say, yeah, they're approved, but it's ineligible findings. But that gets waived if the ineligible requirement is due to the loan to value, because typically their system is based on 80% cash out max, but we go up to 90%. And so as long as we're meeting all the other criteria except the loan to value, we're going to approve it. So that's what that kind of means. I just really wanted to kind of go over that because that can be a little bit confusing if you ever were in the situation where you had to kind of discuss this and, and I wasn't available. That's kind of like what that means, just so you have some knowledge of that. But as far as everything else, the Home Ready, Home Possible, similar products are not allowed for this particular program because it's strictly a cash out refinance product. This has nothing to do with first time home buyer programs or anything like that. And then construction renovation loans, we don't do these cash outs on those types of programs.
What would be the interest rate range on this?
Yeah, and what's nice with these is that, so they told us that there's no loan level pricing adjustments too for this one. So whatever the cash out refinance rate is for the standard for for conventional, we go off of that. It's not going to be a higher one just because of the LTV. So yeah, that's really cool. Yeah, they told us there's no adjustments or anything like that to the rate. Okay. Any other questions real quick on this particular program? I know I've been throwing a lot at you lately, but I really wanted to kind of go over a couple different things just to make sure that you guys knew, just some of the new stuff that's available now to you on top of everything else that you probably already know.
What are the interest rates right now?
Yes, they're actually getting a little bit better. I had a loan that I locked yesterday for a client, and I think I locked him at 6.95 with a half of a point. I let him know, I'm like, hey, look, you're getting a pretty nice seller concession, or I'm sorry, tax proration from the seller. So we'll use that to help cover the difference. So I would say, yeah, it was like a 6.95 on a 30-year fixed is what I locked just yesterday. So they're starting to conventional. So rates are starting to get a little bit better.
What about the FHA?
Yeah, FHA is. I think it's even a little bit better than I'd probably 6.75. So they're normally about a quarter difference between conventional and FHA, as FHA's pricing their rates. So good stuff, guys. Good stuff. And then lastly, I just wanted to kind of touch on a couple of quick things that I won't get into all of the different programs, because I know I had the last class I did, I kind of discussed a little bit of CrossCountry Mortgage's new signature expanded products, which is our non-QM line. But I just wanted to kind of go over a couple of these real quick just to let you know what we offer. And I'm going to do individual classes probably on each and every one of these topics, just so we have a full dive in of what to, kind of expect, what the product is all about, how it can benefit your borrower, and, what are the benefits overall, for self-employed, type of people. So the first one is we have an asset qualifier. So borrowers can get approved using only their liquid assets. which is totally nuts. I'm surprised that we've even got that one, but that is an option for clients now. If they've got a ton of money, they've got a whole liquid assets. We don't have to look at income docs. We don't have to look at anything. So they can qualify strictly on their liquid assets. So just awesome. One that you guys are probably pretty familiar with is a bank statement program. We're doing a lot of these now. I've been doing a lot of these over the last couple of years, but I just wanted to note it on here as far as our signature expanded product, that we have an in-house one now. Because before, the bank statement programs that we've done in the past, we had to outsource those, through other approved lenders that CrossCountry is approved with. But we actually have our own in-house bank statement program now, which is phenomenal. Foreign national allows borrowers living abroad to finance an investment property in the U.S. That's another biggie. That's new. So if any kind of situation would ever come up where you've got a client that is, not living, or a borrower that's living abroad, to finance a property, an investment property in the U.S., they can do that. So those types of things that are now available. Investor cash flow. This is becoming a new popular one, where real estate investors can finance new properties using their rental income only. Like, we don't even have to review anything else. We'll just review all of the leases. If they say, for instance, they already own a bunch of properties and they have, leases for all of them, and they're working strictly, everything is working off of their rental income cash flow. So depending upon what the new property that they're wanting to buy, what the rental income is for that particular one, or the projected one, once we get the appraisal, we can factor that in. As long as they can qualify off of just the rental income alone, they're good to go. No other income docs is required. So very, very cool. We're really starting to get more expanded documents and thinking outside the box. So, but again, with these particular types of products, guys, these are non-QM, which is quality or non-conventional type of products. So the down payment amounts, are going to be different. The interest rate on these ones are obviously going to be higher. Reserves, those types of things. But, a lot of self-employed borrowers are really going to welcome in these types of products because they don't really have options. Because if they, have a business and they know they make money, they know they really bring in $100,000, $200,000 a year. But when you look at their tax returns and they're telling Uncle Sam they only make 30, but they want to go buy a nice house, it's just frustration all over the place, because they're like, I make good money, I run a good, successful business. It's like, I get all that. But if you're not showing, and you're not basically paying taxes to Uncle Sam, and, we can't verify the income that you make on paper, you're going to have difficulty getting approved. These are the programs, guys, that are available now that can help alleviate that stress. And so, yes, I know the qualifications on these are a little bit different, and the rate and all those kinds of things, but it's an option for them. So, and it's something that there are a lot of these clients now, once they kind of get it, they're taking advantage of it. So lots of different things. Investor cash flow. I talked to you guys already before about the 1099 self-employed borrower program, where we go strictly off of their 1099 income. We'll get their 1099s, not their taxes, just their 1099s, and we'll go off of 90% of the gross income from the 1099. So this was one of our first products that we launched, and this was last year, I believe, maybe a little bit longer than that. But I know this one's a great one for realtors too. Since you guys are 1099 employees, there's a lot of union clients that are individual contractors that are 1099 employees. We go strictly just off of 90% of the 1099 income to qualify them. So if they can qualify based off of that, great. So lots of different things that I wanted to make sure and kind of touch base with you guys on today. So any questions at all, definitely let me know. I'd be more than happy to meet with you guys individually too, to kind of go over, different programs. If you guys have some buyers in mind that, maybe we have to think outside the box a little bit and see what they could potentially qualify for, just let me know. I'd be more than happy to kind of talk to you and talk to them and get them figured out. But lots of good, tools, for you guys to get more business. Okay, so I think that was my last slide. I know I took up a lot of time, but I wanted to try to keep it under an hour just in case. if you guys had any questions. So any questions, any scenarios, anything that you guys are seeing out there, if there's something that, um, you even think of, or maybe hear that may be something that would be a great opportunity or a kind of a program, let me know. I could always, take it, up the ladder, see if this is something that what CrossCountry can possibly, entertain and see what it would take. Anything that you guys come up with or hear, let me know, and we'll try to even add that more to our arsenal here. But any questions at all from anybody on Zoom? Okay. All right, guys. Well, that is all I've got for today. So, but yeah, so like I said, thank you again for joining. Anytime you guys have any questions or if you need to go over anything, definitely let me know. But yeah, enjoy your weekend here coming up. Happy selling, and I'm here if you need. Yeah, you're welcome. Thanks, guys. Have a great day.